Livestock markets were filled with equal parts optimism and pessimism in February. Hi everybody, Colter Brown here from the Northern Ag Network with our livestock market report. Going back to January, you'll remember there was a lot of disappointment in the cattle markets as the Omicron virus slowed down the processing pace and actually started to back up cattle. Now, February did offer a lot more optimism, but geopolitical events, high feed costs, and inflation, interest rate concerns, a lot of issues are impacting these markets right now. Today, we're going to talk about some of those challenges the industry is facing and take a little time looking at the outlook for the industry. First, though, we want to thank our sponsors of the report. Ag Risk Advisors has joined us from the very start, and you'll certainly want to talk to them about managing some of the price risk with all the volatility that the industry is dealing with. Livestock Risk Protection offers some effective, cost-effective ways, that is, to manage price risk, especially with seasonal highs likely to be found this spring. It's a good chance to lay out the price risk and leave room for those prices to move higher. Find out more at lrpadvisors.com. Now turning back to our cattle futures, the market was very all over the place this month. We actually started with some optimism, as I mentioned, the cattle inventory report coming out at the very end of January and painting a clear picture of where this industry is headed. We've seen the cow numbers decreasing for 3 years now. That's smaller calf crops and less cattle in the pipeline. So bullish for prices long term and bullish for more leverage in the hands of producers. Now, that took live cattle futures up to contract highs early in the month, and feeder futures weren't very far from those highs, but I probably don't have to tell you how the month ended. When we saw the Russia-Ukraine conflict break out, that disrupted about every market you can think of, whether it be equities, currency, fuel, fertilizer, grain, and of course livestock. Really, it was corn moving above the $7 mark that sent the feeder futures sharply lower, and they lost money for the month. Particularly those front month feeders, they ended back near their November lows, but we are seeing a large spread. When you look out to the fall feeder contracts, there's a $23 spread between spot March and the August futures. So optimism that things are going to get significantly better. Now for the live cattle futures, the losses definitely moderate as you go out into the further futures. We've got next winter, February 2023, over $1.50 right now. I think we can anticipate a lot of volatility to hang around, especially with what these corn prices are doing, and the Russia-Ukraine conflict is likely to be felt for some time. Now, USDA did hold their annual Ag Outlook Forum, and they said corn and soybean production likely to be record large this year, which should help prices to moderate some. Now, one unsurprising part of the markets this past month was the cattle on feed report. That report came out exactly where it was predicted to be. Placements were down 1%, inventory up 1%, but that was largely due to decreased marketings from the aforementioned slowdowns at packing plants due to the Omicron virus. We did finally get the numbers on the 2021 beef exports, and as expected, they shattered all previous volume and value numbers, surpassing $10 billion for the first time in history. We saw the export volume of 15% from a year ago, and the value figure beat the previous record from 2018 by 27%. One factor that did not help the market very much this past month was boxed beef. Prices definitely moved lower, and we actually saw a situation develop where the select cutout was worth more than its lower quality choice counterpart. First time that had happened in 3 years, and maybe signifying that consumers are starting to push back against those high beef prices, but retail values still not very far from the record levels reached last fall. The cash cattle market proved surprisingly resilient in February. Even though markets were disrupted by the Russian invasion, cash cattle traded steady to higher, and for the month we saw $6 to $7 gains on the live cattle, $142 to $144, and dress sales $9 to $10 higher from $226 to $227. February also saw some mighty cold temperatures, I probably don't have to tell you, but drought conditions worsened across the U.S. as a whole. 73% of the continental U.S. now in drought or dry conditions, and it is starting to spread south and east, although I've seen some forecasts say that the northern tier of the country could find a little better moisture conditions later on this spring. Now, as we turn to look at some of our cash markets and local auction yards here, feeders definitely found some optimism through the month of February. Like we say, the writing is on the wall that cattle supplies are decreasing and feed yards were willing to pay more for cattle, and we saw prices look pretty strong. Although I will mention these sales that we're looking at here, they were before corn got over $7. At Stockman's Livestock Exchange in Dickinson, heavier 6-weight steers sold $180 to $189, 7-weights $160 to $170, and 850 to 900 pounders $151 to $156. An exceptionally strong sale in Glasgow, where the lighter 5-weight steers sold 210 to 2 1/4, heavier 5-weights 190 to 198, and those 6 to 6.5 weight steers 183 to 193. With the bulk of the winter behind us, the bred cattle prices improved. At Torrington Livestock, we saw bred heifers averaging $16.75, and the young bred cows not far behind them. In Belle Fourche, young bred cows topped out at $2,000, and solid mouth cows 11 1/4 to $1,300. Packers suddenly found themselves short bought of slaughter cows early in February, and we saw the price jump by a dime easily, and it stayed there. Some of those heavier cows that had been on feed for a while, they sold in the high 70s to 80s, topping at 94. The cows with not quite as much flesh still sold from the high 60s to up over 70 cents, and bulls higher as well. Speaking of bulls, we are into the thick of the production sales season now. Looking at a few of the sales from across the region, by and large, most of the bull sales averages are a little bit below where they were a year ago. I'd say mostly down 6 to 12%. Some of them are higher, but it's not unexpected to see them lower with just less cows to cover this year, and certainly some cost-conscious producers after these high feed expenses. Sheep sales have been pretty scant this past month across the region, but really we have seen several bred ewe sales, and they performed very well, with actually the bred ewe buyers competing with the slaughter ewe buyers and pushing prices higher. Most of those young bred ewes from $350 to $400 a head, and the lamb sales we have seen pretty strong as well. On the policy front, honestly, not a lot of changes for you. The Cattle Price Discovery and Transparency Act in the Senate still hasn't got a hearing, although the Senate Ag Committee says that will happen. Both American Farm Bureau and NCBA support the bill, but both say they do not support mandates on the way that cattle are sold. Also, livestock mandatory reporting came up for reauthorization. That can was kicked down the road for another month, so no changes to our cattle markets at this point. Really, the big news from this past month was JBS agreeing to a settlement in litigation over beef price fixing. They agreed to pay $52.5 million. That was a lawsuit filed by direct beef purchasers, not the one filed by RCAF. So more to come on that situation for sure. Finally, want to wrap up with CattleFax's updated price outlook from the NCBA convention. They forecast fed steers up $18 on the average for a 140. That's an annual average. 800-pound steers, they said, will range 158 to 184 this year, average at 272. And 550-pound calves, they say, range of 180 to 230, the average at 205. And I also went on to say that increased packing capacity and reduced slaughter levels with 3 years of smaller calf crops, like we mentioned, that will help to put more leverage in the hands of cattle producers. Well, that's it for this month's report. Thanks so much for joining us, and have a good one.